was all a dream. I used to read Word Up magazine. Salt and pepper and heavy D up in the limousine. Hanging pictures on my wall. Every Saturday, rap attack Mr. Magic Marley Marl. I let my tape rock to my tape pop. Smoking weed and bamboo, sipping on private stock. Way back when I had the red and black lumberjack with the hat to match.
Buffalo soldier, red like a Rasta. It was a buffalo soldier in the heart of America. Cause I know what that girl them need. New York to Haiti. I got lipstick stamps on my passport. You make it hard to live. In the man of the world don't speak the language, but you really don't need explaining. All I really need to understand is when you talk dirty to me.
From walking, 7 a.m. in the morning, she's calling, I'm yawning, she's jarring, no stalling. I might leave my team from walking, 7 a.m. in the morning, she's calling, I'm yawning, she's jarring.
Talk dirty to me.
There are places I remember all my life, though some have changed forever, not for better. Some have gone, some remain.
A sidestep right left took my beat. I let the moon rock with me, baby. Know that I got that heat. Let me shake his rocket ship. Sidestep right left took my beat. Let it go.
Places after a moment when love was left friends, I still can recall. Some are dead and some are living.
You're not that guy, pal. Trust me.
Cause she's so high above me. She's so lovely. She's so high. Like Cleopatra, high above me.
We don't do the same drugs no more. We don't do the same drugs, no more. Cause she don't do the same drugs no more. We don't do the same drugs no more. I get it until the sunrise. Going 90 and a 65. Windows roll down screaming now. Number one hustler getting money. Why you wanna count my money? I'm a hustler, don't need that one of y'all, you see. We don't do the same drugs no more. We don't do the same drugs no more. She don't laugh the same way no more. We don't do the same. I'm a hustler, don't need that one of y'all, you see.
She take my dinero, take my dinero. She take my dinero, take my dinero. She play it hella hard, playing for pesos. She play it hella hard, playing for pesos.
That's just the way it is. It should never be the same. That's just the way it is. Oh yeah.
It's time. Uh-oh. I don't know about you, but I'm feeling 22. Everything will be alright if you keep me next to you. You don't know about me.
Okay.
You want to. Everything will
Everybody with the guns out. That's funny.
just keep it.
Take me to church. What's up, everybody? Y'all would have lost this poll big time. Big time. Big losses. Welcome in, everybody. Welcome, welcome, welcome. Hope you're doing well on this Monday afternoon. Yeah, you got me in my day job outfit today. But, you know, it's always nice to change it up. Sometimes we're sleeveless with the tattoos. sometimes wearing the button down. So anyway, hope everybody is doing well. Been some interesting action in the markets. I had a stream on Twitch last night. Some of you are familiar with some of the things that I'm going to say just from that, but I know that really the YouTube audience seems to be completely separate. So let me go over just a couple quick housekeeping items, and then we can get straight into the charts. So first off, welcome. Thank you for you guys being here, spending some of your afternoon with me on this Monday. Here's the two housekeeping items. Number one, big love to the stream sponsor, Coin Vigilante. Be sure to check out some of their products. I have a couple of their watches floating around, especially with the Litecoin halving coming up. This is one of my favorite. If I can get the camera to focus. Hello, camera. Hi. There we go. So that's one of my favorite ones to wear. Every now and then you'll see it. But number two, and related to the Litecoin side of things, I will be live with Charlie Lee on this channel. So on YouTube, where we're streaming right now, on the day of the Litecoin halving. So we're going to stream to YouTube the instant, the moment, whatever, whenever the actual Litecoin halving occurs. We'll be live. It'll be me and Charlie, and I'm sure we'll have some guests kind of coming and going. But it should be a fun time. We're gonna have some giveaways. This is why I kind of wanted to start with this, because you see these things laying off to the side. Ballet has contributed 5 of these Litecoin wallets, which are pretty cool. These are silver. I can't remember if I might have, I'll show you next stream, because we're still like 40 days away. But anyway, just a reminder that's happening. You guys are hearing about it first. I haven't even put out a tweet announcing that Charlie will be live with me. So I think there'll be some hype with that. Along with some of the giveaway items like that, Coin Vigilante is also providing a watch. So we're gonna have a giveaway from them. And they're also doing a 20% discount, I believe, for the month of July. So I'll put all that information out on a tweet. So be sure you follow me on Twitter if you don't already. Okay, now, cold wallets are pretty cool. Yeah, absolutely. I like it. So here's the deal. Oh, and then also related to all this, when I do my announcement tweet, I'm gonna ask people to predict when they think, so you guys, when do you think the Litecoin halving will be? The closest day, minute, hour, minute, second, the closest one to the actual time of the event, when the block occurs, will win one Litecoin. I think I'm going to do one Litecoin. Don't hold me to it. We'll see what I end up tweeting out. Maybe I get a little more generous. We'll see. But we will have some kind of giveaway, and whoever can get the closest will win. It's like those old games where you go to like a county fair, there's marbles in a jar, and you try to guess them, how many marbles are there, and then you win. It's kind of like the same idea. It's something fun to do. Keep it festive. Charlie will be there, so it'll be something fun for us to look at and announce. So anyway, guys, let's get into it. First things first, I'm going to try to keep this relatively brief, especially since I streamed last night and covered a lot of this. But welcome. This is more EU friendly than usual, so maybe you guys were not. Oh, actually, you know what? Before I transition, I'm going to stay here. Okay. So anyway, hopefully this is more like EU friendly to a bunch of guys. I need to bring that into a coherent conclusion, to that thought. And now let's talk about charts. Let's talk about the charts and what the big environment is, what we'd want to see, and then what we currently see. So let's kind of quick overview on where we are just across the board, where I see us, like we're like a ship on water, where do we think we are with perspective of the continents and the land masses and the water itself? Where did we just come from? And then where are we headed? So big picture, we are in the pre-halving year. So Bitcoin has a halving. So that's when the amount of Bitcoin that is released into the wild, it is cut in half every 4 years. This is built into the code. This is not something that can be, frivolously, dismissed or changed on a whim. So this is a hard fact. This is how Bitcoin was built. This will be the 4th halving. So the halving is every 10 minutes. When Bitcoin first came out, there was 50 Bitcoin released every 10 minutes. Now there's a little more to it, but I'm just dumbing it down just so kind of everybody's with me. So 50 Bitcoin per 10 minutes. That means if Bitcoin was to be worth, let's say $1, then there needs to be enough buyers waiting around to buy roughly 50 Bitcoin at $1 each, roughly, every 10 minutes. Now, what's interesting is since that moment in time, since day one, 50 Bitcoin every 10 minutes, not only has the price of value or has the value of Bitcoin gone up, but so has the demand, and the supply has decreased. So there's been this increased usage in Bitcoin. This is, you can look at all the different statistics, number of wallets, active users, etc., and you can compare that from the early days to today. Now, I'm not saying like compared to the hype of the bull market or whatever. I'm just saying kind of the big picture trend in 4-year chunks is this steadily increasing move to the upside as far as usage and wallets and activity, et cetera, et cetera. So as that's happened, so as demand has increased, the supply has decreased. And this is something that any economist would say, oh, well, then likely the value, the perceived value of the market of that thing is that it is worth more. It is more valuable. Baseball cards over time, the ones that are highly sought after become more valuable over time, right? And collectors' cars, it's all the same. You get the idea, you get the concept. So then this was the grand design, the big idea, the big what if Bitcoin can go on to do all the crazy things that some of the Bitcoiners say it can, or even do a fraction of that, it's probably going to end up being pretty valuable, right? This was the early argument in the early days. Well, since then, we've gone from 50 Bitcoin every 10 minutes to 25 to 12 and a half to 6.25, which is where we are now. And we're coming up to 3.125 every Bitcoin every 10 minutes, which is kind of it's wild to think we were 50, now we're 3. The next one will be 1 and change. The one after that will be, less than 1. So it's pretty crazy to think that like in less than 10 years, it'll be less than a Bitcoin coming out every block. So, and then it gets more and more like that. So wild to think of where things are today and where they could be. So what you would expect to see, that's kind of big picture. We're in the pre-halving year. Now, if we go back as we have before and we take a look at how Bitcoin has behaved in the pre-halving years, you see that the year before the pre-halving year, so if 2020 was the last halving and 2019 was the pre-halving year, then in 2018, you have a big, nasty bear market across the board. Altcoins, Bitcoin, traditional market, pick your thing. And there was pretty much a bear market no matter where you look. And in Bitcoin specifically, coming into the pre-halving year, which again was 2019, the last time we were there, we had a big impulsive move to the upside. And leading into the actual halving itself, where the bull run commenced, the real bull run, new all-time highs, that kind of thing. So the pre-halving year, we learned 2 lessons from this when we did a deep dive on the pre-halving year through a couple streams before. Lesson number one, you tend to want to be positioned somewhere in the pre-halving year. Like that seems to be kind of the sweet spot for long-term, multi-year Bitcoin spot only longs, right? And then number 2, and emphasis on spot only, because the point number 2 is there's lots of volatility. So whether you're looking at 2019, whether you're looking at 2015, the pre-halving year. So like if 2019 was the last pre-halving year, the one before that was 2015. But if you look at these, there's these big runs, 2 to 3 to 4x sometimes impulsive move to the upside and give back 50% or 60%. So the worst thing you could do, right? Because remember, this is before the actual bull run. This is before new all-time highs and price discovery and the whole thing. So the worst thing you can do is give away your bag, lose your capital, get chopped up before that moment ever comes. And you're sat off to the sideline, liquidated, getting divorced, selling your house or whatever, because you gambled, right? You didn't make a decision. You gambled away your potential future, right? So the way to think about this is pre-halving year, at least this is how my plan. The way I look at this is pre-halving year, I want to be positioned for the bull run, but not positioned in a way where volatility will liquidate me, which to me just means spot only, right? I can sleep at night. I'm not worried about it. It is what it is. Now, some of you guys are way bigger brain than me, and you know how to day trade and, hour trade, minute trade, and second trade, whatever. I roll because there's very, 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 very select few people who can do that on the like long term. But all that being said, just be mindful of your capital. And back to kind of the main discussion here, which was where are we, where are we headed, where have we come from? We're in the pre-halving year. And if we're going to do the same thing we did last time, we should be amidst an impulsive move to the upside. And we're going to look at that right now because I want to get this visual for you. So let me switch to this. How's it going from South Africa? What's up, my man? How you doing? Giving away one Litecoin for the Litecoin halving. So one Bitcoin for the Bitcoin halving. Okay. All right. Chill out. Chill out. I know I'm not that well. Look, come on. It's not like I got book deals and stuff. Okay. Jeez. I don't have Bitcoins to give away. You know what I'm saying? A Litecoin's a lot smaller ask. Okay. So last pre-halving year, we had we bear market low, right? This is what I'm trying to make my point here. Bear market low, impulsive move, and then it gave some back, right? And then we had the COVID dip, but try to ignore this. Like let's just focus on what we can control through the calendar year of 2019. So this is 2019. It goes on to do some scary stuff during the pandemic and everything. But if all we focus on was the actual, the bookends of January 1st to December 31st, and we look at what happened, big impulsive move, consolidation up at a level, and then a retrace to a level. Now, what's cool about this is, and I know I've covered this ad nauseum before, so apologies if you guys are bored with this, but I just still think it's fascinating to talk about, is the pivot. So yearly pivots are lines on the chart that are that show up on January 1st. So this is like the moment that they show up. So here's the pivot for the year of 2018 rather. So this is 2018's pivot, and here's 2019's pivot. Now, what's crazy to me is how, if we just have like a little extension here, that 2018 was where, or 2019 rather, price action rallied to the prior year's pivot, which is this, consolidated a bit, and then came all the way back down to find support on the year's pivot. Look at all these little retests. This is the entire month of December and most of November coming down, finding support on the pivot. So if we did something similar today, what might that look like? Because one of the most common questions I get these days is, "Hey Jack, where do you think Bitcoin's headed?" And all I'm going to say is, look, if we behave as we did the last pre-halving year, which is what we're in, then it would make a lot of sense to me that if I just make an extension to last year's pivot, if we do the exact same, run the same playbook, then a rally to the highs, maybe 47 to 48, and then give it all the way back to 24 or 25, something like that. That is interesting to me, and it makes the most sense really for one reason and one reason alone. It screws the most amount of people, which is what markets love to do. It's like some sinister evil guy petting his bald cat is sitting there like, how can I ruin, financially bankrupt the most amount of traders? Oh, I know. I'll make it go down for a long time and reward everybody who gambled this direction. And this is what, I suspect is happening now. And then we'll go up for a bit and reward everyone who was like a late long and, not going to make it. And all the meme boys can come out and beat their chest and talk about Lambos and stuff just to give it all back. Right. And then flush all those guys out leading into the halving. So I know a lot of people enjoy looking at this halving chart. So let me throw it on the weekly here so you guys can see this because it's actually really, this helps me stay, in the zone, like calm, keeping in mind what is likely to come, like where we're headed, where we are now, that kind of thing. So I'll bring all this back in a second, but let's just kind of focus on what we have. So back here was our first halving. We had a halving, we had a bull run, we had a halving, we had a bull run, we had a halving, we had a bull run. And everybody on Twitter will tell you the halving itself will not give us a new bull run because that's just too easy. And sometimes, and this is my counter to that, sometimes markets just work like that. Like sometimes there's just a thing that causes a bull run. And maybe those guys know something way different than me, But when I see a chart that is literally done a thing once, twice, 3 times, and we're coming up to the same thing a 4th time, I'm probably going to bet that that thing happens again, not be the one to say, you know what, I'm calling it, this time is different. Because everybody knows somebody who said this time is different and they're liquidated, or they're like, crypto's a scam, And it's really all that they're really saying is that they did not properly plan ahead. So this is my favorite way to look at the market, that the halving, that like the bull runs they revolve around the halving. Okay, so that's like a core belief of mine, right? That's something that I get a lot of flack for in Twitter spaces and this and that. And so far, I've outperformed every one of those guys who tried to argue otherwise, because that told me to go ahead and be positioned net long at like January 1st, basically, or looking for an opportunity to bear market bottom somewhere in the months leading into the pre-halving year, so like October, November, December, which is what we did. This was literally, at least so far, and likely will continue to be, the bear market low. So what's funny to me is back in here, it was like almost depression. It was borderline depression, because I understood what was likely to come, right? You look back at halvings, we always talk about, like during the tops, when we're in the tops, one of the things I like to do is talk about, okay, if we're at a top now, then where can we expect a bottom? So we were having the discussions back in here, back in this circled area was when I was like, hey, I think this bull run's over. Okay. And that's not like a yay me thing. That's just what the charts have shown 3 out of 3 times. So like, why, again, it's like the halving causing a bull run. Why would you think anything differently? Like that, the silly thing would be to try to argue, remember the Zooper cycle, Suzu on Twitter, who infamously said Bitcoin will not have another bear market and everything will go up only. He was saying that this is the Zooper cycle. He basically was saying this is like an S curve, right? So there's like the S curve of adoption that looks like this. And he was saying that this little moment in time was going to do this. And we were all going to, be worth, every Bitcoin was going to be worth $160 trillion or whatever it was. So what was silly is that's exactly, you look back at those Wall Street psychology charts, which I'll pull it up right now, Wall Street psychology chart. Okay. Copy image, paste image. Euphoria is where everybody talks about how, oh, we're all going to be rich. I'm so smart. Good thing I bought Bitcoin. You're not going to make it. Ha ha ha. Like all that meme BS, that is perfectly in line with where you would expect tops to be. Now, on a more kind of granular basis, we can go over this another time. It's not really the stream to be going over this stuff, but back in this moment, this circled area, the reason I had so much anxiety about this being a top is because we literally ran a thing. We did a play. We had a trade range, broke above the trade range, came back, retested, and dropped like a stone. And then we did the exact same playbook again. We had a trade range, we had a break above, we fell back below, we retested, and off we went. And back here, it dropped 50% in about a week and a half. Back here, it did this. It did something very similar. It didn't drop near as far. And when a lot of the people in the Twitter space and on YouTube and stuff, there's a lot of very, very popular people who understand how to play sentiment. And when the charts say this is likely not done going down, which this little moment in time told us, if you're a chart guy, if you're a technical guy, you immediately recognize this chart as redistribution. Where you have a sort of trade range form, and this upthrust after distribution is the sign. This is like the canary in the coal mine. This is letting you know, oh crap, this is really just a pit stop on its way down. And lo and behold, right after this moment, this went on to $17,000. So this is when we cascaded down from 48,000 to 17,000. So what I'm trying to say is there's a lot of people who keep trying to tell me I'm wrong with where I suspect things are going based on charts, right? So not just like me or my gut. It's not witchcraft. It's just like where the charts tend to point. And a lot of them are doing the same thing here with the halving. by saying, oh no, the halving's not going to bring another bull run. You know, this is really a good time to sell. You know, we're probably going to go on and make a new low. And there's lots of like arrows pointing down around now. And this is where I'm looking up here. So I really strongly believe, for a number of reasons, that 48 to 50,000 is our sweet spot for the 2023 high. And again, just as a quick reminder, the biggest reason for that is it blows out everybody who was properly positioned for this right here. It's remember the old saying, markets love to screw the most amount of people, and everybody who was short here gets blown out. Bzz, before dropping all the way back to, say, like 24,000. I think 24 by the end of the year is a good level. But anyway, so that's my big picture of kind of like where I think, you know, what's happening big picture with respect to halving, where we've come from with the bear market low leading into 2023, and then where we are headed now, like where we're going next. On a more granular basis, right? And even though these are daily candles, this is sort of a granular way of looking at things. But the inverted head and shoulders, which is really a sort of extension to what I was most interested in, which was this falling wedge. You know, this is the whole reason why, if you go to my Twitter, I have one pinned tweet right here, which is saying the falling wedge, which was 215 days total, consolidated and broke out. And this is, I'm trying to show you that this is a very clear breakout. There's no arguing of like, oh, well, your trend line's a little bit off. No, this is a picture perfect breakout. You can see the price right here, 18,700. This was the market's way, in my perspective, this was the market's way of saying, hey, we're done. That's it. Bear market bottom, done. So I'm watching to see how this plays out, but you could see, going back to our, you know, how this chart first looked, this last little retrace before the impulse up really morphed this falling wedge into some sort of inverted head and shoulders. And that's what you see here with this kind of shaded, triangled area. So this is what's caught my eye, got my attention. And then this was later confirmed with a retest of the neckline, head and shoulders, inverted head and shoulders, or normal head and shoulders. You know, if let's say you had a head and shoulders, which is a bearish pattern, if this started to break down, but then rallied to the neckline only to fail, this is like the market going, yep, big checkbox. This is absolutely a bearish thing, and we're going to go down. So if we invert this chart, right, which is always a great way to check your bias. If you invert this chart and you look at this, that's exactly what your read should be. It's like, oh man, if the chart was inverted and I saw this, I would be very nervous right now. But thankfully, this is the actual way to look at the chart with respect to, you know, the direction of price action. And so if you think an inverted chart is going to break down through all this, then you should also think that the normalized chart like this should be headed up, which is just another way, just you know, I've given you several ways to confirm not only that the trend is up right now, but that, you know, there are much higher targets. So I know a lot of people, especially over the last few streams, have asked about this inverted head and shoulders. So let me show you how to come up with a price target specifically for the inverted head and shoulders, because there's a lot of people out there who like this kind of stuff. Chat, and I'll read the comments here in just 1 second. But let me finish this and then I can catch up with you guys. So number one, the 1.618 extension on linear, you got to make sure you're on linear for the math here to really work, is you can see bang on to where price is actually gone. So here's what we did. We took the head to the neckline and then extended out the 1.618. And you can see that the market has given this 2 tests, actually. So we've touched it twice. That's pretty cool. So that's one target that I like to put for inverted head and shoulders, or head and shoulder, doesn't matter. Any kind of pattern, no matter what it is, honestly. If it's like a falling wedge and you're measuring, you know, if you're doing the kind of same analysis, I'm always going to look at, okay, where's the 1.618 extension to the upside? Because markets seem to really respect that. As you can see, both that touch and that touch are both perfectly on the 1.618 extension. And then the other one is the measured move. So we measured the neckline to the head, and then we extend that up and you can see the upper bounds are up here at about $35,000. So if all you did, if the only thing you cared about really was this inverted head and shoulders, let's say like you were the type of trader where you need a big macro pattern to trade, and this is all you cared about, well, you took profit somewhere, or you're looking to take profit somewhere between this 31,000 and 35,000. So this is your close my position zone. So, you know, I'm trying to just lay it all out there. Even though I have a bias for a move up here, that doesn't change anything with respect to where this inverted head and shoulders is headed. Like the math is the math is what I'm saying. Like 1 + 1 = 2. And this has a measured move to about 35 and a 1.618 to about 32. And we've slapped, you know, that zone twice. Now, for this to really continue, what you want to see is some sort of, probably a little bit of profit taking. Let's do zoom back in here on logs so it's a little cleaner. So for me to get my target up here, here's what I would expect to see. Something like this. Maybe a little bit more consolidation, a further breakout with some profit taking up here at this upper bounds, right? Because I'm sure that would be a thing. Maybe back as a retest, and then boom, big impulsive move for that final thrust. And if we look back at how the last pre-halving year went, I mean, look at all this mess. We had like this head and shoulders, which is a bearish reversal thing, break to the upside. And if we look, these are daily candles. This thing went up only for like 2 weeks, 3 weeks. I don't even know. Let's look. Let's measure it from here to here. So 16 days, 84%. So ask yourself, what would an 84% move in like 2 weeks look like for Bitcoin? Well, let's go look. So that's the power of charting here. We can go back and do the exact same thing. And let's just say, okay, if price was to go 84% in 16 days, that would, from today's price, here's how that would look. So there's the 16. I have to scale this more because I can't get to 84. That. So that would take us all the way up to $56,000 just to copy the move that happened right there. Just to copy this move. Which is wild to think. This was just like one leg of many. You know what I mean? That's crazy. And to do something like that, it would be a move all the way up here, firmly blowing all the stops out of everybody involved. So yeah, bring it, send it. Let's do it. I love it. That's a great move. All right, chat, you're up. What questions you have? EU crowd, welcome in. How's everybody doing? Oh, be sure to do me all the YouTube live stream stuff that I'm not very good at. So if you would help remind your friends to like the stream and follow me, subscribe, I think they call it here. Subscribing on Twitch is a whole different thing. It involves money. So it's like, you're very hesitant to be like, subscribe to me now. Because I'm not trying to be like money grubbing. But on YouTube, I need to be like, hey, subscribe. Like, just click the button, subscribe, and help me grow. You know what I mean? Get the word out. Dom, what's up? Jack's outfit on Twitch and YouTube are polar opposite. Sunday, it's guns out, etc. That's funny. That's funny, dude. Okay. I had no idea this stream is live on YouTube. That's funny. Hide your kids, hide your wife. What's up, Roman? Jared, what's up, my man? Did BlackRock's spot ETF get denied? I honestly have no idea. Chat, does anybody in chat know? Like and subscribe. Yeah, exactly, Max. Exactly. I have no idea on the BlackRock stuff. But side note, guys, to everybody who's been hyping up the BlackRock thing and all that, we cared about this long before BlackRock people even came into the conversation. You remember? This was the time to be looking for a position, or at minimum in here, not on the heels of a BlackRock, whatever, rumor. So this was May 19th. I know it's popular to be bearish, but this could be interesting. This is pretty cool. I'll take it. Now we got what was really cool about this whole thing, this whole setup, was running the lows. That little impulsive move. And if you guys follow me for any length of time, you know immediately why I thought that was so interesting. And it's because if I invert the, again, checking our bias here, if all you saw was this pattern, let's use the handy dandy replay tool and like go back in time here. If this was what we were looking at, right, regardless of bull market, bear market, whatever, if I saw a rising wedge with a pretty clear support and resistance, right? Like this is pretty clear. These are daily candles. I can throw it down on the as low as the 1 hour and even get like a way more granular look at this. Then this is a really good setup for a breakdown of a rising wedge. Like that's what you'd expect to happen. And lo and behold, that's exactly what did happen. And here we sit today, just kind of consolidating after the move. Now, the $1 million question that's on everybody's mind is, and this is what all the streamers who are worth their salt, this is what every one of them is talking about right now. This was our high. This ran the high. And now we've closed below this level. Now, here's my perspective on this. Do I love all these trend breaks? Absolutely not. This is trash. Do I like the fact that it impulsed up and fell back below? No. Then why am I still looking up? Because a number of things. Number one, I'll give you 3 reasons why I still think this thing breaks up. Although, take note, I'm not saying it can't come back and like retest a level and then go. I just still think we're going to end up, higher after whatever J80 things happen. Off we go. But I'll give you 3 reasons why I think we're headed up there. Number one, this was not near enough people getting screwed or trapped into a position, right? If we go back to the last big J80 move that I can think of, which was this redistribution, this got so many people. Hell, I lost friends over this because I put out Twitter content and streams saying, I think this is not the next bull market, that I think we're going down. And I have, Wyckoff redistribution to thank for looking at that. And I literally lost friends over that. They told me you're setting your audience up for failure and they're not going to make it. I literally had somebody tell me they're not going to make it. And it was somebody I respected. About threw up in my mouth. Cause that's not, you don't talk to real people like that. Like that's like internet meme stuff, but like, anyway, so this is like a week and a half of people like going on the wrong side of the trade. You understand what I'm saying? Like this is a lot of hands being exchanged. So the people who bought and offered this kind of impulsive support right here, they're offloading right here, which leads to, this cascade on the other side of this. So the buyers become the sellers and they're tricking you into thinking like, oh yeah. As they're selling to you, they're like, you know what? Like you're a good guy. So I'm going to sell you my bag and you take it to the moon from here. Like I've made enough with my 34 to 47 or whatever this was. And you just take it from here. New all-time highs for sure around the corner, as they're selling. So there's clearly more going on than meets the eye. Now, if we leave it on the 1 day and we come over and we look, all right, so a part of a day, and if you zoom in, you can see this was literally, as far as candle closes go, we closed 3 1-hour candles. And if we look at the volume profile, this is not like a infinite amount of people getting on the wrong side of the trade here. This is pretty standard stuff. Like this is not anything really amazing compared to what we've seen. So I don't see big impulsive actual volume getting trapped. I don't see time spent above the horizontal, which would also imply people being trapped. And most importantly, and this is my third point, the crypto funding. So funding, if we look over at, so I'm using coinglass.com/funding rate. If you guys want this, I'll put it right here. Boop. What you would not want to see, let's talk about what we wouldn't want to see. We would not want to see, so high funding rates look like this, 0.1, 0.13, and red. You see it's a big red number, usually 0.1 followed by something. So 0.1 being the thing we don't want to see. The lowest funding, which implies like a great deal of shorts being opened, are green numbers, and the more negative, the better. So the best case thing would be all these Bitcoin numbers being green and negatives. In fact, I do have some tweets that I put out where I was like, hey, look, there's a lot of people short right now. This is from, weeks ago when it was when it aligned with a sort of bottom before we moved. But what I don't see right here, because again, remember this is a response to a lot of the people saying we're likely to go not just like a cooling off period, which you would expect from a big move like this, but there's a lot of people out there like, oh, new lows, like new macro low, like we're heading to 15K or 10K or something because of this move right here. And the only response I have with respect to funding and stuff goes is there's not people betting on that. Like the idea is you want to try to identify the crowded trade. And if you think of trading as a glorified seesaw, well, who's the crowded trade? Who's on like the heavily weighted side? And if it's everybody long, then you don't want to be on that side. Because like this is going to only lead to pain. Like this is telling you that everybody and their mom is long. And you can see that in the funding with big red numbers, which we don't really see. CoinEx has some, well, that's it. Literally nowhere else is showing a great deal of speculative longs right now. So I don't think this is the top. I recognize what these people are talking about, but you got to look at more than just like, oh, line and price went over line. Like you got to add some layers to it. It's never as simple as just like, oh, that one thing. There's multiple things to look at. So what we can look for on the lower time frame is stuff like Wyckoff reaccumulation. Which we've had some success identifying in the past. So something like this, you have a trade range, you have price consolidating in the trade range, you have a large amount of time spent near the lower bounds, right? So you have the trade range and price continually tries to break down, but never can. And ultimately it breaks up. Okay. And we have multiple kind of like lower time frame breaks, like they call them creeks. So what do we have? We have a trade range. We have one creek, and we're in the second creek right now. So here's my prediction. I bet we just continue to bounce and then later ultimately break up something like this to follow this schematic. That's my bet. And then what I would do is so that would be kind of my trade plan, is that there's a sort of support level through here that the creek is likely walking price down into. So I would continue to watch for this. And should this break down, so again, we can have our bias, and my bias would be that this breaks up, but we need to have kind of a line in the sand for, okay, well, how do we know maybe we're wrong or it's not behaving like we'd expect it to behave or whatever? Well, a break below these levels to me would imply that something else is going on. Maybe it's more of some sort of distribution, but the key to distribution is actually breaking below these levels. So coming down here and holding, as scary as it will be, and it's always uncomfortable during reaccumulation, holding this level is not necessarily bad, right? Because it leads to something like that. But a big break with a sort of like retest, that's bad. That's what we don't want to see, because that kind of blows up any of the setups we're talking about with respect to redistribution or reaccumulation rather. Sorry. If it does break down, then you can fall back to some of the traditional things like, okay, well, let's go from the move low to the move high. Here's the 61.8 retrace, which any technical analyst will always look to this, which is at about $27,000. And what's also interesting about that level, which is why I'm not totally writing that off as a possibility, is that 27, whatever I said, 27,000, somewhere in here, could also serve as a sort of retest to the breakout, right? So big breakout, consolidate, run the late longs, and then off we go, something like that. Like, it would be ugly, and I would prefer not to see that, right? But it wouldn't be crazy. It's not like the craziest thing we've seen. And a $2,000 move after a $6,000 move is really not like the end of the world. So this thing went 26% to the upside in like a week. Maybe give back 15%, consolidate, and send it. There's nothing, markets always ebb and flow like that. That's the whole point of like higher highs and higher lows and all that kind of stuff. So, all right. Woo. Questions. Chat. Oh. What do you got? What do you got? Hit me, chat. Any questions so far? If not, we'll go ahead and call it. Okay. Win Lambo. Ozzy, thank you for clicking earlier. 2025. So reasonable question. The win Lambo, win Moon. Just kind of remove some of this stuff to make our point here. So you have a halving, and then you have about a year to year and a half of a bull run, right? That's like what all this is. And then at some point it peaks. And then you have a halving and you have a bull run that peaks. And then you have a halving and you have a bull run. And clearly, this one really had like a double top or whatever. But this second peak was right in line with this and right in line with that. So, that's interesting. And so I suspect that will continue, and there'll be plenty of people on Twitter who think their brains are gigantic, and they'll be like playing 4D chess with themselves about why, this time is different, even though we're 3 for 3 for a thing happening, but this time it won't, and then it does, and they'll try to argue their way around it. Oh, well, the bear market only came because FTX was a scam. It's like, okay, that's one way to look at it, I guess. Dang, that delay on YouTube. Dude, oh, is it really? Is there like a massive delay? I was wondering. I actually don't know. Or I didn't know. Will we see a mini bull run before the huge move? Well, I think we're in like a mini bull run. Yeah, for sure. So this is why I was talking about before, and you can kind of scroll back in the video. I think you can like scrub back a little bit. But my perspective is basically 50K. So I'm looking for 50K to exit the positions I have kind of through here, to later come all the way back to like 24 to 25. I think that would be so nasty. And then relong before the actual halving, basically double my bag. That would be awesome. That's like best case. And who knows, right? The charts need to flesh out. We'll get more information. I'm typing this at 12:22. Well, your time's way off because it's 2:22 in Texas. Dude, I wish I could say your name. I don't even read whatever that is. Jack, you're the GOAT. All right. Stop it. Gosh. Yeah, the delay is pretty big. Oh, dang, sorry. All right, so chat, I think that'll call it. I think that'll do it. If you guys have any questions, feel free to reach out to me on Twitch. I love just kind of going back and forth. No question is, as long as you give me a chart, I'll take you very serious. Don't just spam me with like BS questions and stuff. What do you think about ApeCoin? That kind of thing. But if you have a chart and you're like, hey, what do you, blah, 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 I'll go for it. I'll look at it. I'm happy to engage with you. So follow me on Twitter at cryptojacklive. be sure you're subscribed to the YouTube here, because I honestly, I'm trying to build that. I haven't done very well the last couple years, but Pantaga's really helped me this year to add, do the shorts and the long form content, stuff like that. So big love to all that. So thank you guys. Thanks for being here. Again, I'm going to try to make these Monday streams a little bit more regular, especially leading up to the Litecoin halving. So we'll see what happens. Anyway, much love to you all. Y'all have a great day, and I'll catch you later. Peace.